So we've seen this already aggressive dollar rally extending further yesterday, and the key event risk that set this in motion was the testimony from Fed Chair Yellen as she stepped up and offered testimony that was actually a chance for her to push back a little bit against the market, the aggressive rise in interest rates, the aggressive rise in the dollar, as after all, these do represent sort of a de facto tightening of monetary conditions or conditions in general in the market. And yet she failed to do so, merely indicating that a rate hike would happen, quote unquote, relatively soon. And we draw the conclusion that means, of course, a December rate hike, which is more or less fully priced in now. So again, with her failing to take the opportunity to push back a little bit against the market, this was seen as hawkish. It allows the dollar to continue higher, and we have to wonder where this stops. We can pick round levels, euro dollar 105, those cycle lows just below that level back from early 2015. Dollar yen a bit more murky where the levels are because we're in the middle of the very big range from 125 down to the 100 area, but 112.50 and even 115 if the 112 plus area fails. But also, I think we all should be, or we should all have our eyes as traders, as FX traders, on the bond market as well, the U.S. bond market and that 10-year benchmark. And these round sort of quarter point levels on yields are very important. So I would look to the 2.50% area in the U.S. 10-year yield as an important level where this may stop. We may see consolidation. It was a significant high in yield some time back. And above there, we have to look at 3%, which was the big high back from the taper tantrum era in 2013, and then a failed attempt above that level not long after. So those are our thoughts on this dollar. We have very few in the way of event risk today, very little in the way of event risk next week. FOMC minutes midweek are completely irrelevant, as these are from the meeting that came before the earthquake that is shaking markets, the Trump election, that FOMC minutes from the meeting just before that election. So really, it's about a clean slate next week, more or less event risk wise, and it's just about sentiment and where the market wants to take this and how well or how poorly positioned people are, as this is about readjusting our expectations for the longer term, not about incoming data at this point in time. Stay safe out there, and we'll see what's going on next week with this big dollar rally.